So let's try and understand the implications of this. We have with us Mr. Ramaswamy Narayanan, the Chairman and MD at General Insurance Corporation of India, joining in on the show right now. Sir, thank you so much, Mr. Narayanan, for joining in today and taking time out to speak with us. How is it that you see this relief and its impact on the reinsurance space and also for the overall insurance industry?
I think it's a major positive. For the last few years, this is something that the industry has been grappling with. So we realized that this is something that is not tenable and not workable. And we have been in touch with all the stakeholders in the government to, make them understand that, this really cannot work. You cannot have GST on multiple fronts on coinsurance as well as on reinsurance. Fortunately, the point has been taken, and we see today that the GST Council has given the relief and said that both the coinsurance premiums as well as the reinsurance premiums are really not taken as fresh supply, so no fresh GST to be charged. I think it's a major positive for the industry because insurers and reinsurers have been receiving tax notices in the past, and that has been a major overhang on the industry because honestly, with the way the industry has been growing, both on the insurance and reinsurance classes, as well as what we see for the future, we do see a lot of growth that is envisaged in this sector. But this was a major overhang for fresh capacities to come in, both in the insurance and reinsurance side. So I think this being now clarified is something that is a major plus. And I think people who are sitting on the fence yet to take a decision, I think this for them would be a major plus.
I just wanted to understand from you, Mr. Narayan, how this is going to impact the overall product demand and whether or not we will see some impact when it comes to the product prices across the industry?
Well, I don't think pricing would get really involved in this because, this was something that we had realized that, GST on reinsurance and coinsurance was not really tenable. I don't think it really made a difference on the pricing because people kept the pricing separate from the tax demands. But the way I look at it is, more and more reinsurers will be in a position to come into the market and offer fresh products, offer more capacity, which would definitely have a factor on the pricing on the demand and supply factors, which I think is a very great positive. So even though there will be no direct impact of pricing because of the relief, but the fact that more capacities will come into the market would mean that there could be pricing reliefs there.
Are there any pending cases which now, in a sense, because of this GST rule, will automatically be null and void?
There were a lot of tax notices that were sent to both insurers and reinsurers. I think it was almost to the tune of 25,000 crores, which is now obviously they've said that it will be on an as-is basis. So, whatever those notices were would go away, and that would be a major relief for companies. Otherwise, trying to take it up every time with the authorities was really a challenge.
For them already when these notices came in, or they were not part of any provisioning in your income statement?
So yes, once the notices came in, people had to provide for it, of course. So obviously that will be a great relief, and this is something we have been taking up as an industry with the tax authorities, I think, and really would like to thank all the concerned people, the DFS, the regulator, and the GI Council here. We've all been working together to ensure that this particular irritant got taken away, and really grateful for what has happened.
Especially the reinsurance industry, what really could be the level of provisioning and how much of write back comes in? You're a listed company, sir. There are a lot of other reinsurance companies which are listed now. So I'm assuming that best practices are when you get a tax notice, you provide it from your balance sheet. Now that will be squashed or that will not hold true, the provisioning will go back, which means either it will have impact on your balance sheet or it will have impact on your net worth and it will have impact on your incomes. What will happen now?
So basically on the contingent liabilities, because these were all provided as contingent liabilities in our books, because like I said, when the notice came in, we did provide as a contingent liability. There was no provisioning made because this is something that was being taken up with the authorities. So the contingent liabilities goes down, which for a listed company like us and a company which is rated internationally is a huge positive.
Why the Indian reinsurance industry, and this outside the gambit of GST, is not growing at the rate at which international reinsurance companies are growing? I mean, if I look at the size of the economy in India, it's about 4 trillion. And for a 4 trillion economy, the reinsurance sector is very small compared to global standards. So why is that?
Well, not really. If you see what has happened is about 28% of the market, of the insurance market, is reinsurance driven. The balance is retained by the insurance industry simply because a major part of the business is retail, which is motor, health retail health, that is. These are retained. These are more or less retained by the insurance sector because they can afford to do that. It is the other bigger ones which get reinsured in the market. And I think from a capacity perspective, the Indian domestic market is looking for a lot of reinsurance capacities going forward, especially since there's a lot of growth. I would say it's a market which is poised, which has already been growing for some time now, but it's poised for major growth going forward.
Do you think that the growth rate for the reinsurance sector would be in and around historical averages, or now that the economy is expanding, business transaction is going higher, you will be able to grow higher than the nominal GDP?
I think so. And there are multiple factors here. For instance, the regulator has talked about going in for risk-based capital. We believe once risk-based capital comes in, a lot of the insurance companies would need capacities that could either come by their putting in their own capital, or they could depend on reinsurers to put that capital. So I think going forward, I definitely do see the reinsurance markets going up, the reinsurance capacities in the market going up substantially in the next few years. So I think a lot of reinsurance companies need to set up office within the country also, and show that commitment from their side. And I think this particular GST initiative would actually help these companies, some of them who are looking at the market but not unable to really make up their minds. I think it's a big plus for them.
Okay, sir, thank you so much for taking the time out and speaking with us and giving us this insight into what this GST relief really means for you as well as the industry.
Thank you. Pleasure to be here.